Hello and welcome to our daily market review and analysis session that we should have had on a Friday. Unfortunately, I forgot to switch on the recording, so hence I wasn't able to send the recording out earlier. However, as I promised, I will do this over the weekend, so I'm now addressing it today. It's Sunday here in UK at approximately 10:30 in the morning, and I have spent quite a bit of time over the weekend to try and update some of the charts and analysis, which I hope to send you out with this recording as a email attachment. So let's begin. As I was explaining on a Friday, that the equity index appears to be just moving sideways over the last week and biding its time. I think it's probably marking out a possible platform from where to project higher. I don't expect a huge amount of movement, but nevertheless I think it will continue grinding higher in a relatively choppy manner in the way that I've indicated here. It would appear to me that looking at this daily chart that since the low we had back in May, it looks like we've had a proper number 1 and some kind of a sort of sideways correction number 2, and we are now currently working on number 3, and within the number 3 we've got a minor Roman numeral number 1, Roman numeral number 2, and currently working on number 3, which could complete around here, for example. Just change the color of that, which could complete around 13,800 or 13,900 somewhere, and then possibly have a small pullback and then do another final leg of the Roman numeral 5 to complete this wave number 3, when a bit more deeper and noticeable retracement could be seen, and possibly still remaining within this gradually rising parallel line or trend channel to retracement number 4, and then pushing higher for number 5, possibly taking it to 4,200 or so. Maybe by that time it will be very close to challenging its all-time high. And just in case perhaps some of you haven't seen my long-term chart of where I think the Dow Jones Industrial is going, let me see if I can just locate that for you, which I've spent some time forming this a little while back, a week or two ago. Now where is it? Okay, so just to remind you that this is the chart that I prepared a little while back, and it was trying to analyze what is happening since the top we had in 2000. And just to explain that many of the analysts, and perhaps the most prominent of that being the Elliott Wave International, Robert Precher, he explained that the grand super cycle top was formed in 2000, and subsequently the first decline we had was going to be the sequence of lower low and lower high, taking the Dow Jones to somewhere around the level it had back in 87, but more cautiously around 2,500 to 3,000. But of course the pattern hasn't quite played out yet, and he still insists that that first wave down was a possible wave A. I have not labeled it that way, but he was saying it was possible wave A, and then we've had this expanded flat with a wave B retracement to the upside, creating all-time high. And then he has up to now been insisting that this decline we had in the credit bubble was the first wave down in the wave C. So if that was the first wave down in a wave C to the downside, so in other words, a wave A, wave B, and a wave C, then wave C, this was the first wave, so this retracement he still thinks is the wave 2, and he could be right, but once it goes beyond the all-time high, which I think is not far off now, if you look at we only need about another 700-800 points on the Dow Jones, then we would clips the high we had back in 2007. So once we do that, then his count of 1, 2 and then big massive 3 would be invalidated. However, I have been looking at it, and I think somehow we've got something different going on here. I think that we are developing a massive decade-long what I call a megaphone pattern. And megaphone pattern is basically an expanding pattern like you see now, but it is also marking out the final wave of this much larger degree. So the way I'm counting this is, since we had this wave 4 back in 96, when for example we've had a sort of a washout back in 96, then we went into this massive wave 5, and within the wave 5 we've got, for example, 1, 2, 3, 4 and 5 to form a wave A, and then we retrace it into wave B, and then we went back into wave C, which almost looks like 5 waves if you look at it, or a 3-wave swing. It's got 1, 2 and 3, and if you were counting it differently, then some people are counting this as 1, 2, 3, 4 and 5. It doesn't really matter. When you get a megaphone pattern, often you will get 3-wave combinations. So in here downside, for example, we probably had a 3-wave, so we've had a 1, 2 and 3 to form a wave A, retracement wave B, and then third wave downwards as the wave 3. So we've got 1, 2, 3 wave going up. I think we've got 1, 2, 3 wave, and then coming down. This to me does not exactly count 5 waves. This to me counts more like the 3-wave pattern, and let me just explain why that is the case. When I was looking at the pound dollar chart, and if you look at that on a daily, or rather weekly, on a weekly, you will see that the drop in the Dow Jones Industrial resembles very much like the drop we've had in the pound. It looks like a small drop, relatively speaking, a little retracement, and then a very sharp and deep drop. And this one does not count as 1, 2, 3, 4 and 5. To my way of counting, this one counts as A, B and C, and then within a C we have a 5 wave. For example, we have a wave 1, wave 2, and then we had a wave 3 up to here that has a 5 wave internal. So 1, 2, 3, 4 and 5. So it is really speaking counting as A, B and C. So with that in mind, I think this drop looks very similar. It counts as A, B and C. So still sticking with 3-wave pattern. So you go A, B and C 3-wave, A, B and C 3-wave up, A, B and C 3-wave down, and we are probably doing A, B and C 3-wave to the upside. And in doing that, we've got minor A, minor B and minor C to form first wave A. We've had a retracement wave B, and we are now producing a wave C of this A, B, C. And if wave A equals the wave C, then potentially AB equals CD could take us to probably somewhere around 17,000. But other notable thing is that this all-time high, or rather the major high in 2000, connected with the recent all-time high in 2007, gives us the uptrend line. And then on the downside, we had the low back in 1997, when you know the Asian foreign currency crisis. So that low connecting with the low back in 2003, March 2003, and then the low we had in 2009. So connecting those three gives us this potential massive megaphone pattern, which has been developing since 2000. So we're into 12 years into this pattern, and I think another possibly 10 months or 12 months would probably finalize this particular pattern, and it would top out somewhere around 16,000, which is a several Fibonacci confluence, to possibly 17,000 Fibonacci confluence, along with the fact that it's intersecting with the trend line. And another symmetry also is that the first wave drop we had was 33 months since 2000 top, and then if you count the number of months in the up leg, it's approximately 60 months. So it's like 2-to-1 ratio almost, approximately. And then the drop we had from 2007 to 2009 almost looks like 17 months. So that's approximately half of the previous one. So could we be now developing this one into potentially 60-month equal leg to that? Because it might not be equal in terms of the exact distance moved, but sometimes you also have a very important symmetry in time. So if this is a 60 months long up leg, and I am thinking to myself that if this also happens to be 60-month up leg, then you can see where it would complete. It would complete somewhere around early 2014, and then within the last leg up here, the first leg we had, wave A, is approximately 28 months. And in fact I have put in here 32 months since the top, but if I was to count it from here, maybe it would turn out to be 28 months, because if you look at the down months, you had 1, 2, 3, 4, 5 down months. So if you take 5 out of 20 out of 32, then my maths tells me it's about 27. So in other words, this second leg up could also be equal in number of months, 28 or 27 approximately, give and take a month or two. So you know, it could actually end toward the back end of 2013, and that's why I'm saying here, if it's 60-month potential, then 60-month potential marks it to around about January 2014. If it happened to be 27 months, then 27 months counting, or 28 months from here, then counting back 5 months from January would bring us to approximately October time, or November, October, September, October time. So I think that between September, October next year 2013 to January 2013 could be a major turning point, and that major turning point will then last several years, not just months, and it will dwarf the movement we've had in the past into insignificance. And then the general technical analysis suggests that in order to estimate the likely downside target of this breakdown of the megaphone pattern would be, of course, the first one will be retest the lower line here, but also they say if you measure the total height of the potential megaphone pattern from the low we had, so low back in 2009, and if you then measure the height of the megaphone pattern and see the percentage difference, so the percentage difference I estimate approximately 60%. So once the lower megaphone pattern breaks, then you would drop 60% to the downside. So 60% from the low of 2007 would take us into the vicinity of 2005 to 3000 on Dow Jones, and this of course then would last several years. If this has lasted 13 years for this only last leg, and since this major up leg started back in 1981-82, then you can see it's almost like a 30-year movement. Is it 30 year? 30 year movement. So if it's a 30-year in making of this leg, and we are going to be correcting that as a minimum, you can estimate that if it happens to be, you know, like a third, that would be 10 year. So we'll get sequence of ups and downs, very volatile, very sharp, and you can see in equity when it falls very, very sharp. So you could get that kind of movement probably lasting, you know, at least 7 to 10 years, and I would not be surprised if this Dow Jones then continue declining to about 1920 minimum to probably 22, 23, and maybe a little bit beyond. So the reason I'm explaining this is because the industrial average seems to be grinding up higher. That means to say that the dollar index is most likely going to continue lower because it has a negative correlation, and that means for the next 8, 9, 10 months to probably a year, dollar index would just continue straight down and make a major all-time low. That's the way I am reasoning, and of course if the dollar continues going down, then you can imagine longer term over the next 12 months pairs like pound and euro would continue up, including Aussie dollar, New Zealand dollar, so forth, and the Swiss franc would continue down, Canada would continue down, and all of these will be and are, I think, in a major new trend which will probably last several months yet to come. So that's the reason why I'm suggesting this, to get a bigger picture right. And if this big picture right comes in, then there is a lot of opportunity to actually trade in the line of the major trend and not be panicked out by a shorter term movement which lasts you for a week or two or a month or so. So with that covered, this is the bonus plus. I don't cover this sort of thing regularly on this daily review, but I have posted this particular chart when I produced this one to the members, and I just wanted to cover that to give you a broader term picture. And similarly, to correspond with that, if you were looking at a bigger term dollar index chart, then this is the dollar index monthly chart. And in the link that I sent to members earlier, where I explained that the 7th of September, I explained the development of this possible scenario that I've just described on a equity index to correspond with the lower dollar index. And I think that rather than going to the length of that, you can review that 7th of September view. But you can see on here that I'm marking out possible two development is the one that many people are still ascribing to, that this is the a larger contracting triangle which would have a down leg and another up leg before coming down, and many of them are thinking that you'll do a down leg and then break out to the upside. So those are two possible scenarios, but I think neither of them will probably work. I think what is most likely, although I can't discount it and I can't be dogmatic, but I think what is likely to happen, having just looked at the dollar index chart, the Dow Jones Industrial chart, is that we would just continue grinding down and produce a major new all-time low on a dollar index somewhere in the region of 68 in the vicinity, and that trend could last us between now until probably October or so next year. And also another thing to remember, as many of you will probably know, is that September, October are usually bad months for equity index. So even this time round we might get a bit of sell-off in that, but I think this time round the sell-off will be relatively short-lived. But if it coincides with a major bear turning point, then those turning points in September, October are very pronounced and very significant, because often they are the mark of a new trend in a different direction. And the other analysis of one of the researcher, I forget the name of, but he did this particular analysis over several years, observing what market did during each year of the decade. So he would say, for example, go back 110 years, and he would put in the first year in every decade and see what it did and what sort of average percentage it moved up or down with. Then he did a second year in the decade and a third year in decade, etc. And eventually he produced some kind of a summary where he observed that the year 3 of the decade could be a major turning point. So for example, if you go back and look in the equity index chart, you will see such things like 2003 mark the top, 1973 mark the top, 1983 mark the top. So these are year 3 often could be a major turning point. So my analysis combining with all of these seem to suggest that I have a very strong feeling, and as I say, I wouldn't be dogmatic. I would still exercise common sense and general money management rule and things like that, but that leads me to believe that we've got a major trend in motion that is not likely to end for at least another 7, 8, 10 months, probably a year, and that we will be looking at possibly September, October 2013 when that trend possibly ends. So hope I'm not sounding too doom and gloom kind of a thing, but just to summarize on this particular chart, out of these possible patterns, which is what this range appears to be in, is that you can have a horizontal ABC kind of a congestion or a pattern. You can have an expanding flat, which they call irregular flat, as A, B and C, or you can have this running flat. And I think to my mind that we had a very strong move down, and this running flat is the one that seemed to me fit the best, although we haven't got a confirmation of that in a sense that we haven't got this down leg confirming this, but I think we're in an early stage of that. We've had exactly this one. We've had a wave A up, which is this one. We had A, B, C down to form this wave B. We've had a wave C, which also correspond with all the other analysis, and now we are producing this wave C. Wave C is finished. Now we are in a new down leg, and that new down leg would take us to around 68, and we've only had approximately just over 2 months of this. Maybe if you count that part of the month of July, then we are talking about maybe 2.5 months or so. So we're in a very early stage of developing this big new trend that will probably last for 12 months. So that's the most likely scenario. This is an alternative where many were thinking is a contracting triangle, but I think that contracting triangle probably not going to work out. If it does, then we would expect it to come down, retest this rising trend line, and then go back up to retest the falling trend line to form this wave E, and then come down. Now if that comes down, then we are looking for a much more longer and more agonizing outcome, which would last for not just a year, but we'd get a 5, 6, 7, 8 months of this decline, then get another 5, 6, 7 months of bounce back up to this falling trend line, and then another year and a half of decline. So that scenario to me is probably not ideal and less, emotionally less acceptable at the moment, simply because of this would really wash out everybody, and it could develop. But my analysis based on the Dow Jones Industrial, I think this first scenario that I'm down, is more tolerable, in a sense that soon after the US election, dollar could possibly tank and make a major bottom in 2013 after so-called honeymoon period and whatever else is over. Then during that time the market could continue index, the Dow Jones Industrial could continue higher, and then it would begin to top out toward the middle of 2013, when by that time dollar index could be on its way to making testing the recent significant lows, historical lows, and possibly on its way of making a new all-time low. So that to me is probably more likely, and that's why I'm leaning on that. So you will probably see that first scenario I outlined more likely to be the scenario I am currently leaning on against other analysis, until of course we get some confirmation that that is not quite working out, in which case the second scenario of possibly this contracting triangle eventually coming down is the one that might then develop. But let's get on with the analysis after having looked at the shorter term picture of the equity index, which is in fact what we were trying to do here, is that I think it will continue grinding up. So in general, the equities, regardless of the of volatility we might see, may continue grinding higher, and that would probably suggest that other instruments which move in conjunction with this, such as a general commodity, although I think things like oil and copper will probably participate in this to less degree, but maybe other elements would move, and in fact even oil and copper might not make a significant move with the equity index, but they may continue to sort of move sideways if they've already put their top. If not, then they may continue to grind higher, but not in a very very strong way. So dollar index, sorry, Dow Jones Industrial Index, looking at a shorter term on a daily, I still expect it to continue consolidating and grinding higher and remain within this a shorter term rising trend channel within the overall rising trend channel that has been in place since the this is the way I've drawn, by the way. If you're looking at this one, is ignoring this first leg, starting from the second leg from July 2009, and then connecting this next leg that we've had. So that produces my lower trend line of the channel, and then applying the parallel line on the top, and you can see how currently it is moving. And that's where within that we are in this narrower trend channel that has commenced from May 2012. So we should be continuing to grind higher on this chart. That's what I'm suggesting. And maybe when we approach the vicinity of testing the all-time high back in 2007, around 14,370, I think it was, maybe at that time we might clip that a little bit, then make a sharper turn down before continuing higher. So look at the oil. Oil here is, as you can see with the same kind of analysis, is on a weekly chart. We had this major washout, that major decline, and that decline is in possible wave A, B and C kind of a zigzag down. Then we had this rise since then. So we had a first leg up as a possible A, B, C, a small correction called wave X, and then we've had this wave A, and currently digesting this wave B, and we should still see a leg C, and I expect along with the equity index rising that the oil could go back up to about 120 or so when it would possibly top out. But in a shorter term, for purpose of our analysis, we've had this rising wedge kind of a pattern. You can see if I just darken the line, rising wedge kind of a pattern which produced A, B, C, D, E, and we've broken out of that, and we have retraced just over 38% of that. We can perhaps have another small leg down to 50%. However, I think that is less likely because when you look at the shorter term on a 4-hourly chart, you can see we've had a small a, small b, and a sharp decline as a wave C. So to me, that formed the first leg down. Okay, and let me change the color of that one to this deep green here, spring green. So that's the first leg down. Then we had a small retracement, and again we had a small leg down, a retracement, and a sharp leg down. So if you look at that, you'll see that the first part and the second part looks identical kind of a pattern, not in terms of a magnitude because the distance travel is obviously somewhat different, but in terms of the pattern, in terms of the shape, they look very similar. Now if it was AB equals CD, then the downside potential was being somewhere around 91.30 area, and we've had a downside just a little bit beyond that. So I think that perhaps that ABC down is probably finished, and we have now started making higher high and higher low, and within which I think we have already put the first leg up. If you look at an hourly chart, I think that first leg up is possibly the first movement down is like A, B and C, small A, B and C, and if that interpretation is correct, then we've had first A down, first B here. We might see a little bit more retracement to the downside, possibly say for example 50% of that. Probably in terms of a level we are looking at around 92 possibly, and then begin to head higher like so. So that suggests that maybe another day or so of possible strength on the dollar index before dollar index would continue moving down, and then equity and oil would continue moving up. So there is a short-term downside. If this is an hourly chart, then the first leg was in fact about six hours or so, maybe. So we would get, I think, about a day or so for weakness. Maybe when the market opens today, later on, it might continue selling off, possibly up to middle of the day, or maybe a US session, and then possibly begin to start rising. and the dollar would continue to weaken. So Euro, USD, and Pound, and Canada, all of them will continue to strengthen against the dollar, probably late in the day. If not, then probably early Tuesday. So that's what I would glean from looking at the industrial average and oil. So we will now move into the US dollar pair we were looking at, but because over the weekend I've updated some of the charts, I will gloss over some, not spend too much time, and maybe concentrate on the ones which might offer some trading opportunity. And I don't suggest you trade all of them, because obviously if they're all moving similar, then there's no point having a trade on every single chart that moves similar. You might then perhaps pick a better one of the lot, or the one that you fancy, or one that you see looks much clearer, and possibly trade that, but use the other ones to help you confirm that the trade you're in is not simply because of a strength or a weakness of one particular currency, but it is a general strength of that currency against all other currency. So for example, if you're looking to go long on a euro, you don't want to go long on a euro just because you think temporarily euro is moving up, and it might simply be a short-term move on a euro and a short-term weakness on a dollar. But in essence, if the euro is gaining against, say, not only the dollar, but is gaining against pound, is gaining against New Zealand dollar and Aussie dollar, or even Canada, then you know that the euro is moving not just because of the dollar weakness, but is moving because genuine euro strength. And on that basis, you would be more confident trading euro. But you can use the other charts to help you confirm your general analysis and pick the better of the lot. And from what I see, I think that euro will remain relatively strong for quite some time to come against most of the other currencies, whilst it will also continue to have its ups and down legs. So what were we okay, looking at the dollar. Sorry, I got lost in my thought. Looking at the dollar, so you know, broader term, what I'm expecting on dollar. This is the monthly chart, dollar index. So we will now look at dollar index in a daily chart. Dollar index in a daily chart, and I haven't actually labeled this, but I've given a little bit of a marking, and just to sort of give you the concept, this is the running pattern that I was telling you about, and this last leg up is like a contracting rising wedge pattern. So rising wedge, you have a steeper uptrend line at the bottom and a less shallower uptrending line on the top, and begins to converge. So they have, of course, another trend line coming up from the top, so it's connected to the top here, and this one and that one, and in a sense everything seemed to have synchronized, along with the fact that we had a shorter term RSI divergence on a daily chart. So having seen this one now break down, and you can see the 200 period moving average, where we moved on either side of 200 period moving average by this kind of a distance in the recent past when the market has been congesting, we have now broken below the 200 period moving average. So even if you simply say, look, we got this kind of a move above the 200 period moving average, so if we now project that on the bottom of the 200 period moving average, where could it lead us to? So we probably wouldn't see any serious bounce until we get closer to this last significant low we had around 75. So that's the way I would look at dollar index, not dollar index, but the 200 period moving average. But leaving that aside, we are in a clear downtrend, as you can see in a lighter downtrend channel that I've put is a kind of a pitchfork, which I'll explain in a moment. But we are moving down, and we probably won't see any significance. So during this period, the dollar will remain weak, and the US dollar, against that US dollar, you got a pound, and euro will continue to move higher. So looking at a shorter term, this is what I'm expecting. We've had a first leg down, and then we had a first leg up, and then subsequently we are producing a 3 or a 5 wave down. So in other words, if I was to actually mark out on a bigger scale, so that you get this in your mind, is that this first leg down here, and I will make that one in a thick brown color, So that first leg down is wave 1, retracement wave 2. Okay, so this retracement here we had is a wave 2, and then since then we have been forming wave 3, and we won't form wave 3 until we get to the end of here approximately. So within that we've got these green waves. So again, on a green wave we've had a first move down, second move up as a wave 2, and we're producing all these green waves. So the green wave will continue until we form a move down to here. So let me change that to green. Okay, so that's green. So we are now coming toward the end of green, but within that end of green would end also at here. So we would have 1, 2, 3. Sorry, let me just move that one back. Okay, so we are looking for, in a green we're looking for 1, 2, 3, 4 and 5. So when we come to the end, so currently we are retracing and we should have another leg down. That another leg down will confirm that we've had a wave 3 of a green leg. Okay, I'm going to confuse you now completely. My apologies, just bear with me. Okay, so what we are looking for is the, if I take the better way of showing this is change the color of that to pink. Okay, now this is the better way of doing it. Okay, so what I'm trying to say now is we had a brown wave 1, brown wave 2. We are currently doing brown wave 3. Within the pardon me. So within the brown wave 3, we are now developing this wave 3, and in that wave 3, in the brown wave 3, we've got green wave 1, green wave 2, green wave 3 to here. Then we currently retracing green wave 4, and the green wave 5 would end sometime next week. So by then we'll be looking for 7850. Okay, so that's the way to illustrate it. So these are a count of a several degree, and I'll take you into a shorter term count in a second. Okay, so this is the way to explain this, right? So what we are doing now is we have the green wave 1, green wave 2, this very big strong green wave 3, currently retracing into green wave 4, and when we bottom around 78 or 7850, that will finish to green wave 3. But in that green wave 3 we will have finished the pink wave to 3 also. Then we'll do a retracement of pink wave and then come down to complete the pink wave 5, by which time we will have also completed the brown wave 3. Then we'll get a brown wave 4 retracement and then a brown wave 5 to the downside. So what this one tells you is that whilst we may not get such a strong sharp move like we've had in the past, but we would basically staircase down with a lesser drop each time as they continue to produce the final leg of its cycle in a lesser degree, and as it completes its cycle wave in its larger degree, if you know what I mean. So basically coming down of this minor leg will complete the green cycle, but it's the last leg of the green cycle. Then it will do a retracement, but by retracing it will be retracing the last retracement of the pink cycle, and it will do a final leg of the pink cycle, and then it will do a retracement, final retracement of the brown cycle, and then it would come down to produce a final leg of the brown cycle as it completes the brown cycle. So that's basically what I'm saying, that it's producing now the final leg of its larger degree, and therefore in doing that you won't get the same sharper movement, but basically it might look like, not exactly, but it might look like a bit more like this kind of resemblance. This one was more sideways and horizontal, but within that you'll see a small staircasing down and slightly deeper, relative deeper retracement, almost seeming like it's retracing the entire retracement of the last leg. So in general picture, this is what I think it will probably look somewhat confusing, but nevertheless it would be producing lower low as it completes its last leg of the larger cycle in completing this big wave 3. Once a big wave 3 in brown is done, then we should have a fairly deeper retracement of a big wave in brown, like so, and then the brown would continue to produce the final leg. So we'll get 1, 2, 3, 4, 5. So by that time I don't know where we will get. These are of course not to scale. It may well be, as I was saying, that we will probably drop down to either 61% retracement of the entire leg up to complete this 5 wave, and if we did, then we'll get ABC on a larger cycle to the upside before coming down, or this might still produce a much deeper leg down 5, probably take us to about 78.50, which is what I suggested. So we won't probably see a real retracement until we might get here. By then it will have broken all the horizontal potential support, and then come down and then do a retracement, probably come back to retest that before continuing lower on a larger cycle. So in a shorter term, we are looking for these shorter down legs and a relatively deeper retracement, but still over a period staircasing down, and this could last for several weeks yet. So having looked at the larger cycle in a shorter term, this is the way we are currently trying to retrace. And I have this shorter term pitchfork. It's a modified kind of a pitchfork that I have artfully contrived. It doesn't really, it's not produced by using a general pitchfork drawing pattern, but the way I've done this is because if you look at that first move of this down leg, where it was almost first leg was caught, and you can then basically use equal width to the downside. So whenever the price breaks below that downside, then it will go to the other end of the next channel, and therefore by drawing this pitchfork I have tried to capsulate that we have actually done just that, and it sort of clears my chart a little bit from too many down lines. So first of all, each time the price came down to the median line, went back up to retest the upper line of this declining pitchfork, and caught them quite neatly. Some of them just a little bit short, some of them just projecting marginal higher, but in generally marked the end of the bounce, and the price then continued. Then in the sharpest one here, which is the wave 3 of 3, we've gone straight through and we've gone to the other side of the pitchfork. Now we are bouncing. So now this median line, which previously was resistance or support rather, should now appear resistance. So using that concept, we have now, you can see, come back within the range of the median line. So it should act as a possible resistance. It looks like we've done a wave A, B, and currently trying to do a wave C retracement, and within that we've already bounced a little. So I think we've only got a minor upthrust left, of the dollar index, and then dollar index should begin to decline into what I'm saying, this next final leg, which could in fact take us to something around here. I'm not so concerned about exactly where it would take us, as long as we are looking at a general pattern. And this, once it starts, this down move could easily last for a week or so. So in general, I'm anticipating that the next week, soon after beginning of this weekend, the weekend ends and the market opens, early part of the week we'll be looking for dollar weakness leading into the remaining of the week, as a general weekly concept. So that's the way the dollar is looking. So on a Friday we were going to look at the US dollar pairs. So let us just go through some of that in quick succession. I've just explained about the dollar index. Well, the dollar Swissy chart looks exactly the same, so I don't want to explain too much on this one, other than it might have a little bit minor leg up back towards recent high, toward this median falling pitchfork, and in terms of the levels, we're looking for is around about 93.75 approximately, and that could be an area for potential short if you wanted to trade that particular currency pair, or look for that currency pair to help you confirm the dollar weakness when you are trading other currency like euro, for example. So I expect dollar Swissy to top out around 93.75 in the proximate area, and then the downside would be retesting the last low or making a marginal lower low. So I'm looking at possibly going back towards somewhere around 92. So that's the dollar Swissy. And of course also on a shorter term, you'll see that it has come back into the resistance line of this trend line I've drawn on the RSI on a H4 time period, and you got a current uptrend, which is the retracement. So as soon as that uptrending line breaks to the downside, then that would confirm that we are now finishing this final part of this retracement, and we'll be looking to head down on dollar Swissy. Then we'll look at dollar Aussie. Now the dollar Aussie has some potential resistance from this falling trend channel or trend line of what looks like to be some kind of a contracting triangle on a larger scale, as you see here, and once that is complete, it should break up. I think it's not exactly a contracting triangle, although the shape looks very much like that. I think what we've had is this major upthrust, then we had a retracement wave A, then zigzag retracement wave B, and a zigzag retracement to the wave C, but the wave C was short. It didn't come back toward the end of the wave A, so normally we'll call that truncated wave, and we are now looking for higher high and higher low. So in that we have ABC move up as a part of a first leg up. We have a retracement ABC move down to here. We call that either a B or an X wave. For the time being, I'm calling that an X wave, with a view that we are now making this higher high and higher low. However, because of this downtrending line, it is possible that we may congest in what looks like to be potential this rising trend line drawn from this recent significant low and the more recently higher low on a daily chart, and then using that as a parallel line to plot it on the top here to give you rising brown parallel trend channel, and I think rising trend channel. And I think before we make a clear break of that, I think we are going to oscillate in a relatively tightening narrower range and then break up. So that would suggest to me that the more industrial and hard commodity market such as iron, copper, oil would probably not make a major run, and therefore the New Zealand dollar and Aussie dollar will appear to be in somewhat congested area before they break up. But nevertheless, they are simply consolidating this first leg with a view of breaking up to go higher, and longer term I'm expecting US Aussie dollar, for example, to actually go and retest his last low here around 111.50 area, and maybe even make a higher high before ending this final cycle up. And if that coincides with our larger term analysis, then I think this higher high and higher low potentially could last us for several months yet to come. But at the moment I'm not suggesting any trade because of this contracting triangle. Wait for confirmation of a break of that to the upside, and then the upside when it breaks would be at least equal to this first leg, but more likely equal to this larger leg we had in the past, which would take us to all-time high it had back in 2007. Sorry, I think it was a bit more recent than 2007. High back in 2011, but no specific trade on that just yet. Wait for this confirmation of a congestion being cleared. New Zealand dollar in a little bit of a different picture, in that it has already broken through of its corresponding downtrend line that you can see here, and you can see on New Zealand dollar it really wasn't a triangle at all, although it looks like a triangle. But basically what it is the we've had the wave A, wave B and wave C, and the wave C was truncated. It didn't come as deep as wave A, so it's a truncated wave, so looking like a triangle, but nevertheless the downtrending line on that has already been cleared to the upside, and therefore New Zealand dollar will also probably try and consolidate. But I think looking at in a shorter term, we do have a potential long trade opportunity. I think this is the wave A, 1, 2, wave 3. RSI tells you that wave 3 is the strongest, so the wave 3 is the highest in comparison to that particular leg up, and I think we have retraced or are in the process of retracing this wave 4. So if we, for example, get within this retracement, we had a small leg down, first leg down, retrace to the upside, we should be getting a next leg down. So if it brings you retracement to about 61.8% retracement of this last leg up, or possibly somewhere about 50% retracement, so potentially in that area around 82 to possibly 81.80 area, I'm suggesting that we could have an opportunity of possible long entry, at least to then go and retest the high on this daily chart here, more recent high, and maybe make even higher high. If this is 1, 2, 3, 4 and 5 pattern, then we could very well go into this previous range here. So looking at that around 80 to 50 or maybe 84 area, 84 to 84.50 area. So from that perspective, I'm looking for potential long entry. If you don't trade this one, then use this as a proxy for confirming strength or a weakness of a dollar index. But remember, Aussie dollar and New Zealand dollar are not part of the dollar index chart that we looked at. The dollar index chart we looked at is made up of Canada dollar, Norwegian krona, Swiss franc, pound and euro make up the dollar index chart. Okay, the US dollar pair, US dollar yen pair, over a longer term, I think it will do something like this down leg here, a fairly long drawn out platform from where to project, but nevertheless the platform being produced is going to eventually lead this price much higher, like so, because coming into this on a weekly chart, you can see with the last down major leg was a contracting triangle. So now we have broken out of that and we've already put a first leg up, and we've had a deep retracement of first leg, which is often the case of first leg breaking out of this pattern. You get a very deep retracement because nobody actually believes that this trend is over. So deep retracement, and then we should begin to move higher. So moving on to the daily, after that major low, we've done 1, 2, 3, 4 and 5, or an A, B and C, whichever way you call it. So A, B, C looks a lot neater and tidier, but it could even be 1, 2, 3, 4 and 5 pattern. So either way, this first leg was done, then we had a deep retracement, and over a period, I think what you'll see is that this shorter term downtrending channel in pink on a daily will break out, and we will then continue to form a broader base. So we might not actually see this rally straight off coming here. We might have this rising blue trend line connecting this significant low and then this low here before the market shot up. That will, I think, be tested few times. So the price may continue like so. In my artful contrivance, if I could try and just illustrate, so we'll probably do a lot more of this. And then gradually building momentum to the upside before a larger trend would lead for market to move out of that. So longer term, that's what I'm expecting. Okay, so but in the meantime, there is no trade on this one just yet, and this particular currency pair would trade a little bit like a pound euro, but over a long term, nevertheless, it will be very profitable. So either I would trade this one to the long side when we see a clear break and the base being completed, or possibly look for using this as a proxy to trade other stronger currency against the US dollar. But the US dollar will begin to strengthen against the yen. So yen will probably remain because we've just concluded that the dollar is in a strong new downtrend, will probably last for several months yet to come as a minimum. And if the dollar begins to gain against the yen, then I think the yen will probably be the weakest currency around in comparison. And strongest currency pairs will be things like a pound and euro. And the Aussie and New Zealand will be strong, but they will be relatively less strong. So they will be like in the middle of the range against the dollar. So when I look at this chart, this is the kind of picture it gives me. So then you can begin to identify which one you'll trade and which one you'll use as a help to clarify your analysis. So that's a US dollar done. We have already looked at the US dollar Swissy. We'll go and look at the US dollar Canada just very briefly, because it looks almost exactly the same as the dollar index and the Swissy we looked at. Where's my dollar chart here? Okay, so dollar Canada, a potential short, either on the break of this small trend line or price going up a little bit and making another marginal higher high on hourly chart around 96, for example. Sorry, is it 96? The last high here was around 98. So either on a retest of that high, or the failure of retest by a break of the short-term downtrend line on the current rising leg that I've applied here on an hourly chart. So if we see retest the last high, we'll see significant RSI divergence. If we don't, and I'm of the opinion we won't, because I think we've had this first leg down is a strong 5-wave move down. But nevertheless, if we don't get the retest of the high, then we have this downtrending pink channel, which would act as a potential resistance, because it has been containing the price. As you can see, we're in a declining pink channel within a broader declining red pitchfork. So both of them comes into view here, and horizontally on a Canada, you'll see we have broken down below this last low here. So this is what I mean when you look at confirmation. See, this one gives you very clear indication we've broken below this last low here, from which the price is raised up in late April. Late April, and price raised up. We've now broken below that. We've come back from underneath to retest it. So that would suggest that the dollar Canada is ready for a short. So I'm suggesting a short with a downside target of at least around 96, and that would confirm we are in a vicinity of that short being now triggered. So I will be posting this chart to you so you can look at this in your time. But this confirms that a dollar index might have already finished retracing against Canada, or it might have a little bit more yet to go. And that's the general picture you'll get from looking at any dollar related charts, pound, euro, that it might over the next day or so, or perhaps part of the day, perhaps do another little bit up leg, maybe a sharp movement up and then reverting down. But basically it's in an area for potential short entry for dollar Canada, with a 96 as a potential target, or maybe even a little lower. But 96 looks a good target for a short entry on dollar Canada. Euro USD, longer term, you can see that it is very much like the dollar index chart in the reverse, in the sense that we are now beginning to complete the last leg of this larger cycle, and so each cycle completing will then produce a retracement, and then another final leg up to complete the next cycle up, etc. So in that, we've on a dollar euro dollar, we've got this first leg up in a wave 1 in parentheses, wave 2 in parentheses. We are currently working, and we've had a number 1 in normal, number 2 in normal, currently working for number 3 in a normal to finish off. So what is going to finish off that? Well, the current retracement, once it's complete, and the next leg up will complete that wave 3. Then we'll see a retracement back to wave 4, and then another leg up higher to complete wave 3 in parentheses, then a retracement for leg down for a wave 4 in parentheses to complete, and then final leg up in wave 5 in parentheses. So that would complete the 5-wave sequence in a larger cycle. But important to note is that this pitchfork that I have applied, the bottom of the pitchfork picked up all the significant lows along the recent uptrend, and previously we had a median line acting as a potential resistance. So now the price have broken out to the upside. It has tested the upside recently, the upper parallel line of the pitchfork, and is now falling back toward the middle of the pitchfork, just like the dollar Canada is moving back toward the middle of the pitchfork. So in that sense, I'm confident that dollar Canada would actually move down, and it's got another structural point from where it has broken up above and now broken down from, and now going back into it to retest from underneath. So this one will be looking for euro dollar long entry, and I think if it comes anywhere around 29, 28, 90, then potentially you could be looking for a long entry. On a daily chart, you can see on RSI we are still in a fairly strong uptrend, like so, for example. So this is likely to continue. This marginal uptrend is over, and that's why we are having this current retracement, but the larger uptrend is still intact. So we might finish up with a new trend line available to draw once we get this recent retracement complete. Will produce a low here. But also important to know is that on a daily chart, RSI has gone above 70 for a first time for a long time. Just show you quickly. You see, ever since this major decline that took place, we never had RSI go above 70. This is the first time it's gone above 70, and that tells me that this is the first hello to 70 on a daily chart, meaning that there is a lot of movement to the upside left. Whenever market sort of ends this major trend to the downside, or in this case to the downside, and then bounces back and then says hello to 70 for a first time, that's not people would say that's an oversold. It's not an oversold. That suggests there's a lot of strength left. Obviously you would expect a correction, but the correction would be then contained, it would probably, even if you had a sharper correction, it would come down to 50 level and find a support. Just like previously on the way down, for example, here it fell down, tried to go up and never go up to 50. Here it fell down, came back to 50, and it proved a resistance. So now if it went back above 50 and come back down, then 50 line on RSI on daily would act as a support. So that's the way I use RSI, more so than potential oversold, overbought. I use it as really a momentum indicator, and the momentum indicator saying this momentum is so strong compared with all that last 7-8 months or over a year, that this momentum is so strong that it is for a first time going over the 70. So that should be a signal for saying this momentum, even though it have a retracement, is likely to continue higher. So after that explanation, this general outline is not necessarily to a scale. The only scale you have is a currently rising this light blue color of the pitchfork is rising. So in a technical analysis, whilst you got that uptrend channel intact, then the broader movement is to the upside, and therefore you would really look to trade the upside rather than counter trend trades. Counter trend trades are difficult, and I think sometimes you get caught in a whipsaw, sometimes you get caught in a sideways congestion, and you never get really a follow through. But if you wait for a decent pullback, I don't mean just by a day or two, but a few days. So in this particular case, for example, we had nearly 6-7 days of retracement. So that's a decent recognizable retracement on a daily chart, and is coming back to the area where we can also quantify. For example, it's coming back to the median pitchfork, which previously was resistance, so should now act as a support. And then in a shorter term, if you look at it, then of this last leg up, which it had 1, 2, 3, 4, 5-way move up, it has come back into the vicinity of 38% retracement. So that's another reason why we should be potentially looking for a long entry in that region. And then what I'm also looking for is, if this pattern that I have confessed to the members, I'm not very clear exactly what it is, but it could be basically that we had ABC down here forming a first leg, we had a retracement, and we are now doing a second leg down, or it's like a broader megaphone pattern, which where we had A, B. So if I, for example, draw this other trend line like so, and make that light color to make it stand out a little bit. Okay, so like so, then it's possible that we've had a wave A, B, C, D, and E. So to me, it looks like a megaphone pattern now. So if this is a megaphone pattern, then basically I'm looking for this last leg down, which might, as I say, probably complete by middle of Monday, or possibly by US session. If not, then late Monday. So this next trade could trigger around 129 to 128.90 area. You can consider going long at that level. In structural point of view, you don't have any significant support until you get to here on a 4 hour as a structural pivot, which is really too far away. But what I would suggest is that in a long entry, you want this price to come down, retesting the last low, and maybe making a minor lower low below the last low, and this RSI will probably produce divergence on the, so that would indicate to me that momentum to the downside is now ending on 4 hour chart. So we'll get a price coming down like so, for example, price coming down and RSI not coming down as much, and potentially giving you a divergence. So that would confirm, for one reason, that the price is going up. Second thing that would confirm price is definitely going up is potential break of this downtrend line on the price action, and you'll probably see some kind of a reversal candlestick pattern in this area. So those things would suggest to me that the long entry is in. So you could consider, entering long entry around there, and maybe you can keep your stop, as catastrophic stop below this on 4 hour chart, below this pivot low here. So even that is approximately 150 pip away, but that would be your catastrophic stop. What I'm expecting then is a price not to weaken subsequently, not by too much below this 129 area. And it should then move higher. Even if it does a spike, it would be sustained. It will be spike low like we've had here, big spike down and goes up. That's why I'm suggesting you keep your initial stop below this pivot low here, which is around 127. Say the actual low was 127.50, but you can keep your low stop at 127.40, for example. So 127.40 will give you a stop loss, initial catastrophic stop loss of possible 150, 160 pips. But enter in with a relatively small position, not a huge big, do manage your trade sensibly. But I would do that as my first entry, and then once it confirms, then you can add to it and bring your stop loss then to just below the whatever the low is formed when this retracement is completed, and that way you can then bring your stop loss, and then once you got your profit 40-50 pip in your favor, then bring your stop loss to break even, and then after that you can relax and let the trade work out and not be too aggressive in moving your stop loss. But the upside target, I'm expecting a retest of this last low, but I think also if you look at the daily chart, then this significant pivot from where the market really sold off in 2000 earlier on in May 2012 is around 132.70. So it's possible that we could visit that again as a minimum for this current up leg, and we'll then see a retracement back to this wave 4 that I'm talking about, and then maybe on the next attempt it will take out these previous pivots possibly. So 132.50 to possibly 132.70 area could be your target. So when you can take some of the position off as it retests this last low here at 131 something, around 132, to reduce your total risk of money being given back to the market, and then the others you can continue to adjust your stops. I'm suggesting long possibly, but do so on confirmation of price showing reversal pattern in that area, and RSI confirming divergence. If however you were entering on a limit order entry, or say 128.90 or so, you can enter a limit order entry, then you have to have your stop around 127.40. If you entered on a price confirmation, then you can keep your stop just below wherever that low is, and that way you can keep your stop relatively tight. So Euro USD potential long entry. Similarly, if you're looking for a pound, and I will send you this chart also. Where is it? I'm having difficulty in locating charts. Pound. It's because it's on weekly chart. I see. So on a pound here, looking at shorter term, 4-hour chart. See, we are currently in this light uptrend that is completing this wave 3. I think we will probably get a small retracement, and that retracement will probably be relatively short. Probably coincide with the general weakness in dollar we are suggesting to develop over the next few hours or part of the early part of Monday. But then you could consider potential long entry, because if you look at this daily chart here, I have this rising pitchfork in bold, and then what I've done is I've copy pasted this line, which is an equal sloping trend line. Trying to redo it. Equal sloping trend line. Sometime when I apply this on a daily or a 4-hourly, the line slope somehow changes. So on daily here, we've had this, for example, rising pitchfork which contain all the significant lows, and recently we've gone over onto the upper part of the pitchfork and hit the top trend line. So that's how good that pitchfork is once it's pivoted correctly. And I'm going to apply it on this high here, simply because price may not come back very deeply to retest the median line. Okay, so with that now in place, when you look at it, we are coming back toward that minor parallel line pivoted on that significant pivot within this rising pitchfork. So that comes into play around here, and the fact that we are expecting dollar weakness for a short term, so the pound dollar should produce a possible long entry around retest of the last low here, at a region of 161.50 area, or minor little lower below that, around 61.40 area. And also then, like the euro dollar, you should get a divergence on RSI on a 4-hourly. So the next price coming down, retest the last low, and then we would find RSI not confirming. Still RSI is still in a uptrend. You can see here, this is a 4-hourly chart. So whilst this small trend channel is breaking down, and that is this one, is completing this wave, but on a longer term RSI is still in an uptrend, and of course price is in an uptrend. So I'm suggesting possible long entry around 161.40, 161.50 area. An initial target would be at least the retest of the last high at 163, and maybe a little bit higher. And again, if you look at in a daily chart, you can see that we've had a significant top over here, which we've currently just tested, and maybe breached that by a few pips. But next week and the next projection, we might actually clear that, and it could even run to 64. But nevertheless, we are rising pitchfork, so as it runs into the top part of the pitchfork, it would experience resistance, and I suggest that the first target would be the retest of that high at 163 area, then a minor pullback before continuing higher. So and in fact all the currency pairs I've suggested will do that, because from the dollar index, you know that I was suggesting dollar index won't have the same level of movement that we've seen in the past. It will be smaller movement relatively speaking, but nevertheless significant. So this one we are looking at could be about 150, 160 pip potential, maybe even 200 pip potential, but then a relatively deep pullback in comparison to what we've seen before, and it would begin to do like it did over here. It would begin to do higher high and higher low, whilst it carves out these final legs of the next higher degree, and in process it will go and retest this larger trend line we had on a daily on pound dollar by connecting this high and this high. And previously, I have been thinking we're in a bearish contracting triangle which will break to the downside, but with my new explanation of a dollar index, I'm now thinking that this is not going to be a bearish contracting triangle to the downside. In fact, it probably won't even play out as a triangle. And one of the reason is the RSI is not showing a triangle. You see, if a price is showing triangle, then RSI should throw triangles. So we've got an uptrend, so that's okay. But in a downtrend, you see, we have already breached the what might have been the upper declining trend line of the contracting triangle. So the triangle is not going to work. So I think what's going to happen is we're going to be doing leg to the upside. So from the 2007 debacle, we had this first leg up, wave A, then we've got this A, B and C. So this triangle is not going to work. So I think we're going to have this first leg A, we're going to get A, B, C down here, and we are now going to be moving up. Or we might have had A, then minor A, B, C down, and then on the next leg up we've got A, all of this as a part of a B, and we'll be doing up leg. So if you do AB equals CD, then overall I'm expecting pound to go somewhere in the region of 177. If it does a full retracement of this one to say 61.8% retracement, then potentially could get to 182 area. I would not be surprised if it did that. There are several reasons because of the dollar index to weaken, as I'm suggesting, and maybe even if you plan this trend line, you can see potential of it actually going much higher. And currently we are in a strong uptrend as a result of this rising pitchfork. So from that perspective, it will gradually continue higher. But once this first 5 leg are over, then probably the pitchfork would fail, because the 5 leg sequence is over. We'll do a much deeper retracement, which will be ABC retracement of this larger degree, and then continue higher. Okay, so that will be a pound. So we've done all the dollar index chart, we've done all the lengthy analysis of most of the major pairs, and to go with this, I will post out, been very busy, so I'll post out several charts for you to look at. But for goodness sake, don't trade all of them, but do look at them for 2 reasons. One, from the point of educational basis, to see how it is being charted. Secondly, to see how some of these charting actually do play out as the market develops its future price perspective, to help you gain confidence in doing this kind of charting. And thirdly, to help you confirm whichever currency pair you decide you want to trade. Once you decide to trade that one, you'll be able to gain confidence in trading that, because the other currency pairs are also, whilst you're not trading them, are confirming something similar. So using other currency pairs correlation analysis to help you confirm the stronger part. So you pick the strongest to trade against the weakest, and then use others in between ones to help you confirm that you are in a clear trend. So I am suggesting that the euro will be relatively strongest currency around, and you will find that that will play out against most of the others. And just so that you understand the charts that I will send out, let me just quickly show you what I mean by that. So say for example, I've just made a statement of euro potentially being the strongest currency. So we are saying against the dollar it definitely going to be rising. You can see on a pound euro longer term chart, on a pound euro, this is the weekly chart of pound euro, and on a weekly chart of pound euro, I think if you look back, maybe what I should do, okay, so on a weekly chart of pound euro, you can see that it came from the left here back in September 92 and before. It came from the left, lower left here, came up here, so it did a major wave A, then we had ABC down as wave C. So now we are completing leg C, so wave A, wave B, leg C, and that would then complete the euro topping out in a major way. So in here, within the leg C, I think we've got the first leg up. So we got 1, 2, 1, 2. Let me just see here. 1, 2. Okay. This pattern here is a bit unclear, but we had a leg 1 up, then some kind of congestion here. So maybe that congestion, leg up A, leg 2 down, and some congestion developing that into wave 3, 4 and 5. So we've had a 5-wave move up to number 1, retracement to wave 2, and then we had a very strong uptrend of wave 3, and again that's got a 5 waves, got 1, 2, 3, 4 and 5, and you can see on RSI should be the strongest on a wave 3. This is where it is strongest on wave 3. So then we had all this congestion and declining to recent low as a wave 4. Okay, so wave 4, so we got 1, 2, 3, 4, and we are now looking for the final leg up to complete wave 5, which will retest the last high on a euro pound and probably make a little higher high, and it would then run into this trend line on the top. So we got top back in 1995, and then top back in 2008, and then that would then run into it possibly. So we might get a top in that kind of area. So longer term, in order to complete that, the euro must rise against the dollar, I mean against the pound. So if the euro is going to be rising against the pound, then we begin to see that we are currently in an uptrend. We've broken this downtrend quite clearly. The next milestone will be the next higher trend line coming from the top as a potential resistance, and possibly horizontal structure coming into view here. The horizontal structure with a pivot is around here, look. So we've had the first structure will be this one, where we had a support, this area where price hesitated a little bit, so that could be a next potential area around 83, and then the one above that would be in the region of around 85 to 86, because that's where price had a support and resistance. So that could be a next one, and then we run into that downtrend line, as I say. But once we break above that, it will eventually make its way to retesting the all-time high we just pointed out around here. So if that scenario does play out, then you can understand that the euro will be relatively strongest currency around in order for it to do that against the pound. Okay, now once we've established that, then the euro is also in a potential long entry that I outlined in the charts that I will be sending you. And this recent decline or retracement is in ABC. It's within a channel, and that channel break, and the break of this downtrend line on the RSI on the 4-hour will definitely confirm that the retracement is over, and then it will continue higher, and it's continuing higher within this rising I'm clicking wrong buttons, 4-hour, and okay, so you can see this rising trend channel for the time being. I haven't applied a pitchfork on it yet. I'll try and experiment with that one, because eventually pitchfork would be a better way. But for the time being, we have that, and if this low is already in, then you can see we have now a steeper part of the wave being built. So if this is wave 1, this is wave 2, we are now steepening into wave 3, which is what normally wave 3 would do, and within that we've got a minor 1, minor 2, minor 3, so this is steeper than the previous one, retracing to minor 4, and then we'll complete the minor 5, and we will continue to steepen and gather momentum against the pound. So euro will be strong against the pound. If you look at euro against Canada, then likewise, downtrend lasting for several well, quite a long while, several years in fact, rising, and we're now coming to the end of that decline. We've broken out of that decline. If you put this trend line on, you can see that we have now apparently cleared out of that recently, or have broken up and now coming back to retest that from the bottom. So again, on the euro card is a potential entry on a pullback, possibly around 126 area, but it's on a rising trend channel, rising trend line on the RSI. So all of this confirming that the euro will be stronger against the Canada. And the Canada backed by oil, bound to be stronger currency, relatively speaking, and yet the euro will be gaining ground against that. If you then look at the euro Swissy, which is pegged, and apparently that seemed to have broken out into life recently, although I'm not necessarily spending time analyzing that. And then euro New Zealand. New Zealand currency has been relatively strong until recently, and therefore the euro has been declining in this strong downtrend. We are now coming back toward the top end of this declining trend resistance line, but once we clear out of that one, we will be looking for then long entry. So at the moment the euro is gaining against the New Zealand dollar and is going toward the top end of this declining trend that lasted several years, and I think it will probably congest in that area for a while and eventually clear out of that one. Then the same situation with the Euro Aussie had a long downtrend. This shorter intermediate downtrend appears that we've been already breached that downtrend line, currently just hanging on to that line, done a short retracement, and on a break of this RSI, which is already confirming the RSI is broken out of the downtrend, so this pullback could well complete relatively soon, and then we have a potential long entry on here at 126 on a pullback here around 123.50 area, and then a potential target of 126.40 to the upside. So that one is currently in a rising mood, and if they continue, then you can imagine euro will be the relatively strong currency around. If you look at the pound, we said the euro and pound will be weaker against the euro and it's rising. So if you just look at the pound against some of the other currencies, then you will see the same pattern developing. See, this is a pound New Zealand, for example. Pound New Zealand in this declining trend, recently been building base for ending this decline, and then eventually it will begin to gain momentum to the upside on a pound New Zealand. Then you look at the pound Aussie, very much the same scenario. You see this declining trend line. We have in fact now we've tested that down trend line once. We fell back, but the fell back hasn't been as deep as the previous one. So could that suggest that we have now become stronger than we were at this point? So the trend declined, but it didn't decline, but it did retrace deeply. So this might have been actually the first leg up. The major bottom has been formed here on the pound Aussie dollar. Major bottom was formed back in February 2012. We had a very strong uptrend to form this first leg up. We've now retraced back here, and now we are beginning to build the second leg up, and second leg is now approaching that same trend line that we shied away from last time. So on this occasion it could actually go up, and you can see on a shorter term we do have in the making what I think is likely to be a potential head and shoulder pattern if it develops. But I'm not concentrating too much on that, but what I'm suggesting now is that we may get, say for example, this first leg up to here. Once that is complete, that will be ABC. We may have another kind of decline, which will be a percentage of this one, maybe coming back to retest this last low here, forming kind of a base, moving sideways maybe in a triangle, and then eventually breaking out of that to the upside. So from that perspective, the dollar will be gaining against Aussie and New Zealand, and if the euro is gaining let me restate. The pound is regaining against the New Zealand and Aussie, and if the euro is regaining against the pound, then you can imagine the euro will be the strong currency around. So that's my analysis. So I think I've gone rather very long, and it's a very long video. So I do apologize if it bores you, but if it does bore you, of course, you have a choice of switching it off. But I hope you find this explanation and this in-depth overview over the weekend to compensate for my error on Friday when I failed to do the recording session on a Friday. Compensate you for that, and also several charts that we've gone through, I will be posting them out. I don't promise that I'll be able to keep all the charts fully updated during the week, but as some of them prove interesting, I will. And of course from tomorrow we'll be looking at pound currency pairs, and then each day we'll look at like we have done in the past, group of currencies. So Monday is a pound currency, then Tuesday will be euro currency pairs, Thursday will be I think a yen currency pairs, and Friday will be Monday pound, Tuesday euro, Wednesday yen, Thursday Canadian, and then Friday back to US dollar, and in between we will look at anything that is striking. So that is all from me. Thank you very much. Enjoy this video. Hope you had a wonderful weekend, and please do join me on Monday if you're able to on a live session. I'd appreciate that. Any questions, any comments, any suggestions, more than welcome. Of course sensible comments would be good. constructive comments would be good, even if it is not necessarily complimentary, but if it's constructive, I'd be more than happy to hear from you. And any request of any particular instruments you want me to go over or include or analyze, to help us overall to be more successful in trading, then certainly it will be my pleasure to do that. So in the meantime now, thank you, and I will end the recording here and post it out to you as soon as it is completed and uploaded on the Dropbox. Thank you.